How would you like to crack the code to a very successful real estate career? And how would you like to know the code in here on how to be a successful realtor? That's what we teach here, the Realtor Code. Hi, I'm Mark McInerney, President and CEO of CodeMark Financial. Welcome to Mortgage Money Genius, where we teach realtors, just like you, all of the workings of the most important piece of the real estate transaction, the mortgage process. We are having a conversation about interest rates because your clients are always asking you about interest rates. Shouldn't you know about them? Sit back, relax, and let's learn. 3, 2, 1, off we go.
I just wanna be your superstar, 'cause it's not where you are, it's where you are.
Welcome back, my friend. Interest rates. Interest rates, interest rates, interest rates. Just like you guys. Location, location, location. All right. Well, interest rates would be location inside of what we talk about the money. Like it's the bow on top of the box that is the wrapping of the home inside, and it is captured around with the present. So, interest rates. They're going to ask you, you know they are. They're going to say, what is current interest rates? And you got to know what's going on with them. Better yet, the more you know about having this conversation, the more value you add to the client. The client looks at you as more than just a real estate agent. And you are more than just a real estate agent. But to prove that, knowing this information is going to lend you more confidence and certainty in what you offer your client. And I'll have you consider, when you know this, you can't lose in this space anymore. There's no more bad pre-approval letters and not understanding what's going on in underwriting. And most importantly, when you get that pre-approval letter and there's an interest rate on there, or your client turns to you and says, hey, what are all these fees? You're like, I got you, right? Of course, if you partner with the right team, you won't have this situation, but it's important to know it anyway. So we were talking about interest rates. What was a good interest rate? Last time we discovered that it's not like what's a good interest rate, it's what's the right interest rate. However, there is actually a general kind of format of what a buyer should look like in order to qualify for the best interest rate, or AKA the lowest interest rate. What might that be? Well, as it always has been in the past, it is associated with 3 things. It's credit score. It is also going to be the down payment, and it's also going to be the loan amount that the client is ultimately seeking. Let's discuss credit scores. When you see this low interest rate being offered, whatever it is during any given time, interest rates are always going to be subject to change based off of the performance of, I would say, our current economy, which, yes, it's based off of that, but our current economy is now attached to a global economy. So as all things are kind of considered equal at some level, the interest rates are going to be largely affected by how everything really ties and is operating together. But whatever that interest rate is, banks always hold these 3 basic criteria. And at the bare minimum to get the lowest or the most aggressive interest rate during any given time, one is going to want to have a credit score of 750 or higher, okay? 750 or higher. It's worth noting that as a credit score falls 20 points from that 750 benchmark, the interest rate will adjust. That's the term that we use in our space. It adjusts or it takes hits. It takes hits from whatever the going market rate is and goes higher as the credit score goes lower, okay? Next piece is down payment. Yes, lenders offer loans with less than 20%. And this whole 20% idea, I think, is a bit of a rumor around you need 20% down because that's what my mom and dad used to say. You need 20% down because there's no PMI. This is all true. But the fact of the matter is that lending guidelines have allowed themselves to become more progressive so that people can afford less of a down payment. I'll also have you consider when our moms and dads were buying a house, they were like 40, 50, and 60 grand. So putting 20% down on that was doable. Now, the same 40 or 50, $60,000 house, comparable to today's inflation and overall economy, is more like a $200,000 house. Putting 20% down on that is not as easy as it once was. But having 20+% or more for down payment lowers the risk assessment of that buyer, which a bank says, you know what? I'm willing to give that buyer the lowest interest rate that we've got. Next would be a loan amount. Now, the loan amount minimum as of today that banks are looking to package these aggressive or most aggressive low and best interest rates is going to be a loan amount of $175,000 or more. Now, this is $175,000 or more, but yet under the current jumbo limit. Jumbo limits or jumbo loans, I should say, excuse me, have a different interest rate altogether. But most buyers are going to fit inside of the conventional space. So the interest rates are going to be based off of a $175,000 loan or greater, like I said, but under the jumbo limit. Furthermore, it's worth noting, because a lot of people think, well, I'm going to get a lesser loan, so that actually makes the bank feel like I'm a safer bet. Not necessarily true. These loans are packaged up into real estate investment portfolios that they're selling to Wall Street, okay? And understanding that puts a better understanding around why a loan less than $100,000 isn't as appetizing to the investors that are going to purchase this loan to package it up in other investment portfolios, mutual funds, things of that nature. So a $100,000 loan or less is also going to take hits and or adjustments to an interest rate, regardless of if the credit score is 750 or higher, or if a client is putting down 20+%. The loan amount also has to kind of check off this box. Take a quick look as a recap of what those three pieces are. These three pieces, a credit score of 750 or higher, a down payment of 20+%, and a loan amount of 175 or greater is what is going to get your buyer the lowest and most aggressive interest rate during any given time. All right. It's interesting. It's not just a number on a mortgage payment slip. Like, there's actually some depth behind this interest rate, right? And man, if you know this, just as quick as this video has been, I mean, this is just conversational knowledge. You don't need to be able to get very super surgical unless you want to come and get on this side, which you might want to consider anyway as real estate and mortgages evolve in general. But that's why you're here, is to start learning the information to add not just 1 time the value, but 2 times the value of the job that you already offer to your clients. All right, guys, let's go into next week where we close up and wrap up this whole interest rate conversation. Until then, like, comment, and share, and I'll see you then. I'm Mark McInerney, President and CEO of CodeMark Financial. This is Mortgage Money Genius.